We have a guest in the studio. Before we welcome him, let him hear the day's proverb.
Yes, our proverb today is from Equatorial Guinea, a country that borders Cameroon and Gabon. Both countries huge in size compared to Equatorial Guinea. Equatorial Guinea is like a small little piece of earth that was carved off, borders the Atlantic Ocean. Okay, that's the bigger neighbor.
Is it on the equator?
No, it's not. It's not on the equator. Yes. But
when you look at the equator like this,
if I was looking at the equator exactly the way you said, and it's not on the equator.
yeah.
Did you close with the right eye?
Yes, I closed the left eye, but even if you move the equator, it's still not on the equator.
Okay.
Nobody holds the cow by its horn while another is milking it.
Nobody holds the cow by its horn while another person is milking it.
The same cow. What do they hold?
If you've never milked a cow,
I haven't
You would
actually.
ask those
that's
questions.
a cow with horns, then yes, you would ask those questions.
I haven't actually.
Somebody who has will tell you, hardly, you don't do that.
Oh, I have. I've milked cow.
Okay.
What have you done? You've
Milked a
witnessed
cow.
a cow being milked?
I've actually milked a cow, but not for 3 seconds.
Okay.
The duration of time doesn't matter. It's the experience. Even if it was just half a second, it's good enough.
I'm looking at the map, city, and equator, Tropic of Cancer up there, Tropic of Capricorn, Equatorial Guinea. Yes, the equator passes through Equatorial Guinea. It's there.
How many equators are there?
One
be just
equator,
one.
bwana. The one in Meru,
It's the same
the
one.
one in Nanyuki,
The one in Maseno.
the one in Maseno, the one in
Still the same
Timboroa.
one.
Same one goes.
Does it move from time to time?
No, sorry.
Then how did it get to Equatorial Guinea?
The earth is round.
EDWIN Dande is the CEO of Cytonn Investments. He's joining us in the studio this morning. Good morning.
Morning.
Welcome to Kenya's biggest conversation again.
Asante.
Yeah, karibu sana.
Here.
Can you see the equator moving?
No, I think it's static.
Wait, you know there are some places where you go to and you're like, wait a minute. How is that equator that's in Nanyuki going to Maseno? How is Nanyuki and Maseno on the same line?
It's that sort of thinking that led people to believe that the earth was flat. That thinking, the one you have.
That the earth was flat.
Yes, and then it also excommunicated people who said it was cylindrical, it was round, because they said this is heresy. How can the earth is not round, it is flat. So, equator. If it passes through Equatorial Guinea, it is okay.
It is equator.
Yes. If it wants to pass through some other place, it is still okay. I mean, I'm not going to argue with the equator. It can pass through where it likes.
It's fine.
Yeah, and I'll believe. Since it's not something I can actually see.
So it's not like Kayaba, which has been planted.
Yes, and you can say that's the equator. It's
like
it's
a fence.
No, it requires you to have a lot of faith to believe that the equator exists and that it's an imaginary line. So if it's,
Okay.
enough said.
So be it.
Enough said.
EDWIN, you're here because we want to talk about access to finance, a conversation that we've had before. The president is launching various projects. One of them is the Hustler Fund, of course, where he's saying the Hustler Fund, the personal loans right now are for you to get access to your own finance if you're running a sole proprietorship or whatever. Other products are coming up in February, the SME product and it's all about accessing finance to run businesses primarily. Now, this is, he's already said 8% is the lowest you can even get in the market because commercial banks are giving you at higher interest rates. The other lenders are giving you at very higher interest rates. And so this is going to be a very cheap and more affordable way of accessing credit. Does it make sense?
It's a good signal because he's addressing a problem that exists in the country. But before we discuss whether it makes sense or not, it's good to frame the issue. We have an issue of credit. Businesses cannot access credit. So you need to quantify how big or how small is the issue. Look at our GDP. It's around 12 trillion Kenya shillings. Now, if you want to then figure out how much credit do you need, you look at a metric called credit to GDP. So in this country, credit to GDP is around 32%. For an economy to work, for example, South Africa, credit to GDP is 100%. If you look at the more developed countries, Japan, China, US, it's 200%. So you have to start by saying, I need at least 100% credit to GDP. So you need 12 trillion of credit moving in the economy, right? But now if you look at where we are today, credit to GDP is at 33% in Kenya. That means you have 4 trillion of credit. So you have a gap between 12 trillion and 4 trillion. So your problem is 8 trillion. Very simple mathematics. So then you have to ask yourself, then what steps do I have to take to move from 4 trillion to 12 trillion? And you can't do everything. So you have to ask yourself, what are the top 3 things I have to do to be able to move from, even if you don't get to 12 trillion, at least get to even double, get to even 8 trillion. So what I like about what the president has done is that he has signaled to the nation that we have a problem and taken that first step. So that's the good part of it. But 50 billion a year will not move the needle. It's like a drop in the ocean to move from 4 trillion to where we need to be at 12 trillion. So it makes sense, but a lot more needs to be done.
Explain the logic of having 100% credit to GDP. What does that mean? It's credit in the private sector? Or
credit in the private sector. So that is funding businesses.
Total credit in the private sector should be about 100%, should match the GDP of the country.
Yes. If you look at South Africa, it's more looking at comparative statistics. You just take countries in the world.
South Africa is almost a bad one to look at right now.
But at least it works better than where we are. Or you go look at the US. It's like looking at, for example, standards of living versus way of governance. Why is it that countries that are more democratic tend to have better standards of living? So it's really based on comparative analysis.
I would prefer we look at the Asian countries. And the reason why I'm saying that is because of their saving culture. The capacity that they have for saving lots and lots of money. So that even when you talk about this credit to GDP, what you're actually referring to is a situation where the country is actually borrowing from its own resources or from its own people. So these things that we end up, like now, if you look at the headline in one of the papers today, we are likely to pay 4.5 billion shillings simply because the dollar has done a thing. Okay, because we borrowed. The borrowing was pegged to the dollar. And yet, so the shilling to the dollar. Yet, if we borrowed in shillings, that problem wouldn't exist.
But now, Edwin is actually talking about credit in the private sector, not government borrowing.
In the private sector.
It's individuals borrowing.
Individuals and businesses.
And businesses borrowing within the economy for their own development.
Actually, the reason why I took it there was because government borrowing has a very direct impact on what is available for people to borrow. Very direct.
And City, that's a good point. But if you look at, it's good you've asked for the Asian countries. Japan is 192, so essentially 200%.
200, yes.
South Korea 170. So at least even when you look at those Asian countries, they are way above 100%. So even when I was saying it needs to be 100% like match GDP, I'm still being very conservative. Yeah. Where we are saying at least let's get to South Africa. Or
why are we at 33%?
That's now the primary. You know, you started by asking me about
it made sense.
If Hustler Fund makes sense. And yes, it makes sense as a signaling to a problem we need to address. But the question you've asked is really the central question. Why are we at 33%? And what are the steps we need to take to get to 100%? Because once citizens then understand the issue, then they'll be able to evaluate these steps that are being taken. Are they really speaking to the issue? If we ask why are we at 33%, and then you go look at these other economies, you'll find what we spoke about here the last time. This credit is not coming from one place. if you take, I always like to prefer I always prefer to give US as an example because I'm familiar with that market. You'll always find that of this credit, 60% comes from capital markets, 40% comes from the banking sector. Now imagine you're dealing in a market where you've wiped out the entire capital market, so you are left with only 40%. So the key issue, if you are to do one thing in this country to improve credit, it would be to stimulate our capital market. It's such a simple thing once you understand the framework of where credit comes from. So then the question is, will the Hustler Fund and initiatives like that be able to bridge the gap between 4 trillion to, let's say, 8 trillion or 12 trillion? It's a good signal. But the real problem that we need to fix, and if we don't fix it, I always tell people, let us talk about these initiatives 5 years from now, whether it's funding irrigation, funding affordable housing. If you don't solve the credit problem, we will be here again in 5 years.
I mean, usually when we look at a problem, we've already formed possible solutions in our minds as to say, look, this is an issue. It's been an issue for as long as there has been, number one, the entrepreneurial spirit, whether it has been called that or not, as long as there has been the need for development, there has been this problem. There has been the issue of access to credit. And when we look at that problem, the solutions have been formed in our minds. Rudimentary, complex, whatever the solutions may be. And that remains the question. How then should or would governments or entities then sort this credit problem? Because in as much as it is a troublesome problem in Kenya, it is one in very many other countries that in order to get the economy going, you have to have private business at the forefront. Now, one of the impediments to private business is the access to credit. How will that then be solved? What are some of the answers?
It's a good question, and remember, it's not only access to credit. It has two facets. It's access to credit is not there, and when you get it, it's terribly expensive for those who can even access it, because you are paying anywhere between 18 to 20% if you take the all-in cost of credit. Now, going back to your question, what needs to be done? It's something that I've given quite a bit of thought, but then I've looked at where are the areas where we've done well as a country, and I picked two areas. One is digital money, M-Pesa. We've been able to, digitize money like no one else has done in the world. So if we can do that, why can't we then grow credit? The next place where I think we've done well is generally democracy, our constitution, compared to other markets, where we've been able to actually do away with the old constitution, bring a new constitution. If you look at those two areas, there was a group that formed and said, we are going to change this. I think it's often said that M-Pesa would not be there if you didn't have people like Mishuki, who said, do away with this old way of doing things. Let us give Safaricom a chance to digitize. If you look at the new constitution, there were the reformists led by people like Raila and the people around him who said, no, we want to do away with the old constitution. We want a good way, a new way of doing things. So I think to resolve this credit thing, you will need a Mishuki in the financial services or in the capital markets who will look and say, let us look at all the structural impediments to credit coming into the market. And then let's rewrite the constitution, so to speak, of our financial services field. I don't see any other way, because they are almost like myriads, many impediments in the regulations that when you look at it wholesomely, you realize that you really, really cannot bring enough credit into this market. You only have the banking sector financing businesses. 99% of credit is coming from banks. You've killed an entire section that could bring you credit into this market.
Paint for us a comparative picture, Edwin, let's talk with the US, where you have experience in, and how the capital markets in the US help businesses from startup to that point where they're actually growing as businesses, and then compare that with Kenya and the challenges. Show us where that challenge is and what it would look like if it was working well.
I think the challenge starts from the top, governance, so to speak. It's good you've asked about the US. I can't remember his name, but the guy who runs our equivalent of CMA, the Securities and Exchange Commission. You couldn't find a better qualified person in capital markets than that guy. He has taught the subject matter in some of the best schools in the US. He has practiced it, not only in Wall Street, but at Goldman Sachs, the best place you could possibly practice capital markets. He has then regulated it from the government side. So he knows it from an academia point of view. He knows it from a practice point of view. He knows it from a government point of view. Then now he's seated there regulating the entire thing. So he's able to then facilitate the process. Then you come to so there's a governance, and then there's also what I would call the aspiration of a nation. These are nation that, and when I say these are nation, I refer to the US, that wants to innovate, create things and sell to the world. So we need that mindset, and it's good you're asking about it because today is Innovation Day, Jamhuri Innovation ICT Day. So we need that kind of thinking where we say, how do we get people with ideas? How do we fund these people with ideas? And how do we throw these ideas to the market? If the idea is good, it will sell. If it's bad, it will be killed. It shouldn't matter where you come from, your last name and things like that. It should just matter what is your idea. You put it in the market, people fund you. If it's a good idea, it grows. If it's a bad idea, it dies.
It dies.
Yeah.
Practically, I wanted a practical example of how the capital markets could help those ideas. There are very many ideas that then would be looking for money at whatever stages in the development of a business. How would the capital markets help such an idea to actually become a big conglomerate?
Yeah. If today you have a commercial idea and you go to a bank, they will ask you for collateral, so you can't move.
Yeah.
That's why capital markets are important. Now, capital markets, you will start from the venture stage, the initial stage. In fact, even the venture stage, you start with an angel investor. An angel investor is somebody who is your friend, family. They will forgive you if these things don't work out. Then after that, you go to commercial venture capital. Then you go to a place where you have to put credit. Then you have equity investment. So there's a whole continuum of investment that an idea goes through. So if the funding is not there and you have an idea, you won't go far. But if we stimulate capital markets and you as Eric come and say, I have this better way of doing radio or doing TV or doing whatever, you'll put it there, then we will have a way for investors to evaluate it. It's called an information memo, where we send it to people and say, this is Eric's idea and it needs $1 million, for example. People will evaluate it and say, okay, I'm willing to give you 10,000. And you see, within the capital market, there is governance, so that when you send the 10,000, there is a trustee, there's a custodian, and if this idea works, then you will share in the return. If it doesn't work, then you know that your 10,000 will go south.
But at what stage is this? Is it at the listing stage?
No, these capital markets, by the time it gets to the listing stage, it's almost like now ordinary. It's been properly de-risked. This is at a point when it's still private, because even capital markets, there's the regulated and the unregulated. And it's good you've asked that, because those are some of the things that we need to change in this country for people to realize capital markets also can be unregulated. So at that venture stage, it's very private.
It's individuals actually just looking at your idea and then putting money into it. And because it's not regulated, who's shouldering the risk?
Because it's, okay, whether it's regulated or unregulated, the investor shoulders the risk anyway. The issue of regulation or no regulation is just difference in playing ground. In the regulated sector, what we are saying is that you are dealing with, for lack of a better word, wanjikos. So you need somebody to step in for them and review these products or be a referee. in the private arena, you're dealing with people who are sophisticated or ought to be sophisticated. So they can hire a lawyer or an accountant, or they can read the information memo for themselves and reach a conclusion. So you don't always have to have products regulated.
Okay. Time for a break, 7:30. We are talking about the challenge of accessing finance in Kenya. And EDWIN DANDE, the CEO of Cytonn Investments, is here with us in the studio. What is it that we need to do to actually improve on this particular sphere?
This is the Situation Room, the only way to start your day.
To continue the conversation with EDWIN DANDE, we're talking about challenge of accessing finance in Kenya. So one of the things that you're saying, Edwin, is that we seem to have one primary source of credit, which is the banks.
The banking sector.
The banking sector. And yet we should have multiple sources of credit. Now, the capital market, as you say, is one wide pool that we could go into, and we're not getting into it. Mainly because you say regulation, this and the other. Is it because of the lack of awareness that we are in the situation that we are in, or is it because of other mischief?
I think it's a little bit of both. Because as I keep saying, the problem is straightforward. You have 4 trillion coming from the banking sector. You're supposed to have 12. If you take capital markets, you're supposed to have regulated and unregulated. So if banks gave the 4 trillion that they've given, you have private capital markets giving 4 trillion, regulated capital markets giving 4 trillion, you are home and dry.
Yeah.
So what you're missing is that 8. So then your question, if I had to break it into pieces, you're asking, why isn't there a development of regulated capital markets to deliver 4 trillion? And why is there a development of private capital markets to deliver 4 trillion?
Okay.
I think it's where we are as a country. We have to develop. We are developing. The kind of thing that you are doing as SpiceFM, that's where you have to start, where you're educating people. Guys, listen, the reason why you cannot access credit is that these two parts of our markets are sleeping. So what do we do? Because if you talk to my grandmother and ask her what is private capital markets, she would not know. But when you start conversations like this, it starts to stick into people's minds.
Let me take a step back in this whole, for education, just a little bit. I mean, we've heard it many, many times, but then what is the role of capital markets in this whole string of things? What is their role? What do they do? Who are they? What are they?
Good question. This is the market that goes and looks for people like Ndu who want to save and get a better return, rather than just putting your money in the bank. And it's interesting, these days you put it in the bank, you get nothing for it. The bank then lends it to the government at 14%, and the government has to tax you again to pay that 14%. So you are getting nothing as you lend the money. The money is lent to the government, and then you have to pay.
Yeah.
That. Yeah.
You're the one who pays the money that you lend.
So what the capital markets would do, we would come and convince and do that, look, don't put all that money in the bank, let it also circulate within the capital markets. When it goes to the capital markets, of course, it's creating more businesses, creating a bigger revenue base, creating more taxes and growing the economy. So the capital markets is the place where people with money put it to earn a return. The ideas and businesses that are looking for money go there to get that cash. And I keep saying it can both be regulated and unregulated. Those two pieces are essentially completely missing in this country.
The examples that you've given of those other countries, looking at the Asian countries, Japan, Korea, that are at close to 200%, did they develop this way? Did they start with a heavier leaning towards the banking sector and then the development of the capital markets, or did they happen simultaneously?
Almost all economies start with the banking sector because that's what we know. A bank is where the money is. But then as you get more sophisticated, you realize that, look, you can't do it with the banking sector alone. Let us develop a capital market. Luckily for Kenya today, I'm confident that the average informed ordinary citizen is ready to deal with the capital markets. Because if they can deal with M-Pesa, why wouldn't they be able to deal with capital markets? So we just need to have that national conversation or the Mishuki drive to open up these capital markets. So yes, we are developing, but it's not at a point where you can say the citizen or the nation is not ready. It's just like democracy. We were ready. We just needed that push in terms of the 2010 constitution. So we need a 2010 constitutional moment within the capital markets, and it will open up.
Who controls them? Who controls these capital markets? Because what we're saying essentially here is that this access to credit problem that everybody cries about, whether you're at, a one-man army business or you're a 100-man army, 1,000-man army business, that the access to credit is an issue. But we are saying that if capital markets then would pick up the slack a little bit, bear this real responsibility on their shoulders, that we could probably see this gap then starting to close. Who runs these markets? Who? Because it's not some amorphous figures. There must be who are the people behind the market?
I will use again our politics. If you remember that thing called Section 2A, I don't know if you can remember the repealing of Section 2A. Before it was repealed, it was a one-party system. Once it was repealed, it opened up and anybody could form a party. Currently, our financial services are under a Section 2A kind of environment where if you take all these things in totality, it's the banking sector that is in control of the economy. So what then you need to do is to repeal, have a Section 2A moment. Once you do that, it opens up and it's almost like asking who controls the political environment or the political parties. There's really now no one person. You will have formations. You're going to have the Azimio formation, you're going to have the UDA formations, and then you're going to have these other
independents,
chamandogondogo as they call them. And every 5 years, there'll be a reformation.
But you can see them, Edwin. You can point to them and say that these are the individuals who ran said political party. You can look through history of time and say there was this individual, there was an Eric, there was a Charles, there was an Edwin. And you can't tell me that with this money that's running in, or lack of money, and the people, again, who bear the responsibility or have the task then of making sure that there is superfluous money in the economy, that they are ghosts. Are they banks? Are they banks? Are they external financial institutions? Are they individuals with a huge... Who are they?
I would say they are mainly the money centers. The money centers being essentially the banks that control the majority of deposits and loans. So that's one player. Then there is also Treasury, CBK, CMA, the regulators. That's now the second player. And then I think you now need the citizens and the political parties to be aware of the challenge so that they can begin to agitate and have a conversation with the regulators, with the government, and with the money centers and say, there is a problem. How do we resolve it?
And there it is. And that's the problem. And that's the question. If you have Treasury as part of this whole menagerie right here, who is tasked with the responsibility of making sure at some level that the economy is working for its citizens, and then also realizes the responsibility it holds to make sure that there's credit flowing through, because it is clear that if the private part of the citizenry is going to run this economy, that we have to then make it viable for them to do so. But at the same time, you hold a certain control of the reins. You are taking here and putting here. It's not going to happen. It's not going to happen.
You are really getting to the core of the problem. If the problem is obvious, how come it's not being resolved by these people who are around? And I think if there's ever a time to resolve this, it's this regime. Because let's be honest, the previous regime and the banking sector were close. So it is just conflict of interest. If I am on this side, and that's the side that butters my bread, of course, I won't have the incentive to really push for the other side. this current regime, at least as far as I know, is not in bed with the banking sector, so to speak. They don't own banks. And if anything, I hear the leader of majority, Ishungwa, constantly saying big telcos are too expensive. You are exploiting citizens. The cost of credit is too high. So they seem to want to resolve the issue. I think it is more getting to understand what the issue is, because yes, they are complaining about savings rate are too low. They're complaining cost of credit is too high. But I also don't hear them saying, and this is why. So that they can then put the conversation about capital markets at the center of trying to resolve the things that they are trying to resolve. One mistake we keep making, when cost of credit is too high, we then want to regulate banks. That is not the solution. Let the banks make as much money as they can. Leave them alone. Go and create these markets that don't exist so that they compete with the banks. So they are always they're always trying to solve the problem the wrong way by saying, let's regulate banks, let us cap interest rates. We tried that for 3 years. It didn't work. We took it out. They should just leave the banking sector alone and go and create this market that does not exist. So what I tend to find frustrating is there's not a lot of conversation going on where it ought to be happening. There's a lot of conversation going on where you cannot do much about them. Yeah.
You know, in the first years of the Kibaki administration, 2003, 2004, and those first years, into the second term, we saw some robustness in the capital markets. This is the time when everybody now started looking at the Nairobi Stock Exchange, which renamed into Securities Exchange, into the CMA coming into proper robustness. So there was a direction and a shift being led by government in going to the capital markets. With the IPOs, this is the government going to the capital markets to actually raise capital from there. Was that a good trend? And what is it that happened? How come it went and just went silent? We haven't seen any new listings in the NSE for a while.
I think Kibaki was a unique president in the context that he stayed back and let the economy, the professionals work. And yes, you saw a more active capital markets. But they didn't go far enough to actually reconstitute the relevant acts, the relevant regulations. So then you have a capital market that depends on then who is in power. You need to change it, such as so that it's a totally new beginning, such as the Constitution of Kenya 2010, where before that, for example, the swearing in of the president depended on whatever the Chief Justice wanted. But now we can know our next president will be sworn in on this particular date between this time and that time. So you just need to reconstitute the regulations and the policies around the capital markets arena so that it doesn't really depend on which regime comes into power.
If you say then that the government shouldn't have any control, so to speak, how then will we cure this crony capitalism that we have? Even if we create the capital markets, will we not see the same things that we see within the banking sector? Because it's one huge club. Yes, it is. And they are in bed with the government. And as you correctly put it, you have your money in the bank lends it out, and then you end up paying because the government has borrowed and you need to pay. And they keep making money. And you say correctly that if we then strengthen the capital markets, then indeed it would be competition. But for how long? Because the way I see it, it's the same people who own banks who will probably again be in the capital markets. I'm talking about Kenya as it is. So what real change will there be?
CT, you are right that it's probably the same people, but not quite. First, even if it's the same people, at least let's have two different sectors competing for funding the government and funding businesses. However, it's also unlikely. You always find that the people who really drive capital markets and the people who drive banking sector and even the people who drive insurance in a more developed country tend to be very different people. A banker thinks about collateral. The moment you walk in, the first thing is, what can I hold? Do you have land? Do you have a car? A banker thinks about cash flow. If these were to succeed, how much money would come out of this idea? They're always thinking about the future. So these two markets think very differently. One is collateral driven. I want to first hold something before I fund your idea. The other one is future cash flow driven. I want to take a bet on how much money could come out of this idea. So the two are not in any market going to be one and the same people.
In big economies such as the ones you refer to in the West, yes, it is possible. But in ours, no. Everybody, the moment someone is in an industry that's predominantly money-oriented like a bank, they'll be into everything else. I mean, I'm just going by history. Yes. They're in the hotel business, they're in horticulture, you name it.
Because they have the money.
Yes, that's it. So, again, I am looking at the broader picture of how this will benefit the Mwananchi. I don't see it. If it benefits the
City,
Mwananchi...
what do you see? So let's take this one person called Mr. Muga,
Yes.
right? Who is so liquid, he actually owns a bank.
Yes,
He's so liquid, he also is in the other sectors of the economy.
yes,
If there was a developed capital markets, he'd also play a role in it. He'd like what Edwin is saying, he'd take some of his money and save by investing in the capital markets
yes,
and have a huge say in it.
yes.
Is it going to be a conflict of interest? That's what you're saying. There's
Yes,
going
there
to be a
will be.
conflict.
Because in this country, they will not play a part, they'll own it.
But because
They'll control it. That's really what I'm saying.
aren't you seeing, City, because this person is completely selfish, they look at the side that is actually making them more money. And if the capital markets is making them more money,
They'll
then
go with it.
they'll go with it.
I'm starting from the point of view of the issue of control. Huh? The reason why central banks exist is predominantly because of that reason. There wasn't always a central bank. The US that Edwin has been quoting didn't have a central bank. No, it was just banks. And those guys were running amok. Seriously. They could decide what happens, how and when. It was a small club of people. And then they figured, no, this isn't really going to help the country in the long run. And so even those so-called big banks, Morgan, which later became Morgan Stanley and what have you, came together and figured how to cobble up something that later became a central bank or a Federal Reserve Bank. What I'm saying is, the control notwithstanding, I am looking at the practice that we have in this country and how it is the people who own capital, people who own money, and how they conduct themselves. I'm simply saying, yes, the diversity is important and it's good. But all we'll have done is given these people a bigger playing field where they can own more.
Where they can play Monopoly in real life.
Yes, that's all that will have happened. Yes, I don't see how that will, forget trickling down, how that will be of direct benefit to the so-called Mwananchi. I don't see it.
City, I can see what you're saying, but I think you're also being a little bit too cynical.
No, this isn't cynicism, this is realism.
Where you are saying that if we then stimulate the growth of capital markets, it will replicate almost one for one what is happening in the banking sector.
And the Mwananchi will suffer more as a result of it. Well, let me give an alternate example to what I'm saying and how this has developed over time. If you look at communities that are business-minded or that with whom we relate business to, they have informal ways in which they do business. Okay? For instance, Eric and I own land. Okay? You own a factory. Edwin has a bank. Now, because we're in the same community, a third person comes along, they don't necessarily have to have money. They just need to have members of their family guaranteeing something, and you will be able to give them credit by giving them goods. We will be able to give them land and say, we have this land, you can build here. Not charge them anything. The collateral will be the confirmation and the backing of their family. Okay? But again, it's collateral. If you look at, again, those same communities where, in the absence of, say, I want money in the US, and I know how it works, and I know people in that system, I don't have to go to SWIFT or anything. No. I simply need to go to those people and travel to the US. I'll get my money waiting for me in the US. Okay? I just need to go and see so and so, and that's it. So what I'm saying is, these systems come about when people realize that this other sector that we have, it may work, but it has impediment. It doesn't serve our interest well.
I hear you, and the reason why, and I hear the example you're saying about an area where you know family or it's one person controlling, but there's also the example of when we were a single party system, when KANU was Baba na Mama. Then we opened it up. Would you then say that the emergence of these many parties has really hurt the Mwananchi? I don't think so.
No, it hasn't.
Yeah, so it is the same thing within capital markets. It will be an opportunity for somebody to come up with another idea in the capital markets arena, which could upset the other side, which is the banking sector. And even if it might not happen, CT, at least let us take the chance and then say, okay, we tried and it didn't happen. The same way we took the chance when we were seated as a one-party system, we took the chance and say, let's open for other parties and see how it works. I think it has been better for the country. It could be the same people creating the same formations every 5 years, but at least they know now I have to deal with other people to get into power, as opposed to I only have to get into KANU to be in power.
That optimism of yours is actually the enemy of progress here.
Okay.
You see, we talk about President Kibaki and the things he did. President Kibaki, when he came in, remember this man was an economist. That guy had worked in government. He understood that this guy knew. And if you ask me, during his presidency, he's the one who ran Treasury, if you ask me. Okay? Now, that first year, if you remember, all of these huge capital projects were halted. Nothing. It's like, let's reorganize ourselves and see exactly where we are. The thing that stood out for me is how he reduced our dependency on borrowing. Now, what that did was it released money. Okay? The banks didn't have this lazy approach towards making profit by simply lending to government. They started hawking money to the Mwananchi. No, it wasn't even complicated, but the Mwananchi was able to borrow. It was not complicated. Now, we've seen what works. It worked very well. Then the Uhuru government came in and it's like we reversed all that completely. So we didn't even, there's a talk of going back to factory settings. This one, even the factory didn't exist. So there was no setting to talk about. So here we are now again struggling, and yet there is a blueprint of what was done and what makes the very thing you're saying possible. Because if money is available to the Mwananchi, what you then do is you increase the circulation of money because a lot of people have it. The capital markets you're talking about then has a place it can nestle in and where it can work. But now the dry docks that we're in right now, and you're trying to usher water into it, that water will just be swallowed by the earth. And you'll still have a dry dock, and you'll be wondering whether all that water you pumped in, you'll be wondering where it went to.
So you know it's Jamhuri. Be optimistic a little bit, eh?
No, but that's the whole point. I'm talking freely. It's Jamhuri. That's the whole point. Did we not attain independence? These are the fruits of independence. Yes. You see, I believe that what Edwin is saying is true and it is good, and one should think along those lines. But the playing field has to be one that's conducive for what he is saying.
It's a reality.
Yes, so that the benefits he's talking about can be a reality. So that's really all I'm saying.
You're saying we are not ready to develop our capital markets.
No. I am saying the people in power are not ready to help us develop it because the system as it exists benefits them sufficiently anyway.
But then we are saying the same thing. That's why I said we need a constitutional moment in the financial services industry.
At what point did I disagree with that?
Edwin, come again soon.
Please.
Looking forward to it.
EDWIN DANDE is the CEO of Cytonn Investments. Thank you very much for joining us. We wish you all the best. Are you going to Nyayo Stadium?
I will pass by.
Yeah,
but
pass
I'm
by
not
there.
appropriately dressed. I see you have to be in yellow.
That's a quiet. That's a quiet. No, you're dressed. That's black is the color of the Kenya's flag. Yes.